Hello, my name is Emily Traster, and I am here today with Dan Dalton, one of the founding members of Dalton and Talmadge. Dan has helped a number of churches leave the United Methodist Denomination and keep their property. How are you doing today, Dan?
I am doing great, Emily. It's good to see you. How are you?
It's good to see you as well. I'm doing good. So, Dan, what are the terms annual conferences are looking for with respect to local churches leaving the denomination?
Well, those terms vary by each annual conference. Under the baseline of 2553 of the Book of Discipline, the conferences look to apportionments, 24 months of apportionments, and what they claim is an unfunded pension liability. That's the baseline. Many conferences are saying, looking at the apportionment process, is saying, listen, pay us 12 months apportionments in the future. And then with respect to 12 months in the past, if you are current and up to date, you don't have to pay those. If you are not current, then you have to go back 12 months to pay your apportionments or your fair share, as some conferences call them. On the pension issue, it's really conference by conference. There are some conferences, well, let me start here. It's very established right now that there is no unfunded pension liability. Westpath issued a report in September of last year noting what the funding level of all pensions in every conference says, and it's at 110% on the funding level. They created a market level, which is just a ridiculous formula to create essentially a deficit, not really based in reality. And that's, a lot of conferences realize that, so they're not really requiring local churches to pay that amount. When you're thinking of the pension number, it's an exit fee. It's what is the amount of money that you'll pay that'll be less than paying for litigation, less than the risk of loss on litigation. So a pension is a number that is basically a created number by the conference. It's not a liability. The pension's fully funded. Your pastor is going to get his pensions. So there's really nothing to worry about there. There's other conferences that are not charging for pension. They're just charging for apportionments. There's some conferences that require a percentage of the fair market value of your property. There's one conference right now that says that as of July 1st, you're going to have to pay the fair market value, but before July 1st, if you have your decision by June 30th, you won't have to do that. And so every conference is different. Some are requiring healthcare to be paid. Some are requiring additional salaries to be paid. Some are requiring grants to be repaid and loans to be paid. Some provide for a timeline on grants and loans. We're kind of a unique position since we're working with churches across the country where we know pretty much the parameters of what churches are required to do. And we can help local churches have that discussion when they're thinking about disaffiliation of what to think about. So those are it's a conference by conference, state by state issue. And it's just something that you should give us a call and we can talk that through and help you make that evaluation of whether the cost of disaffiliating and keeping your property, and it's really all about keeping your property, is worth your time and effort.
And I've heard that Florida Annual Conference has an insurance requirement. Can you tell me about that?
Sure. So Florida has a unique situation that I'm not aware any other conference has the same situation. In 1996, they switched insurers and they changed insurance policies from an occurrence policy to a claims made policy. An occurrence policy provides that if there's any incident that occurs during the course of the policy coverage, you have insurance coverage. On claims made is that you have to have your claim that has to be made during the course that you own that policy. It has to be submitted during that time to get insurance coverage. And claims made is less expensive coverage. Florida also has a $1 million self-insurance for their claims made policies as well for the Florida Annual Conference. So the issue that's arisen is that churches that are disaffiliating in Florida, and again, this is just a unique situation of Florida, cannot stay on the policy because the policy is for the Florida Annual Conference, not for the individual churches. For whatever reason, the The insurer for the Florida Annual Conference will not allow a special rider that would basically provide tail coverage for these churches who's essentially paid for the policy since 1996. So if you're leaving the Florida Annual Conference and there's an insurance coverage requirement, that's going to have to go back for a certain period of time. The original policy provided or thought is that churches had to get policies and coverage back to 1996 to cover any claim, because there's a special tort that exists in Florida only, that the statute of limitations is wide open for that. We started working with churches in Florida, and we found that that coverage just isn't available. The insurance market doesn't provide for coverage that goes back to 1996. So we went back to the Florida Annual Conference and worked with them. And basically what they're looking for is 3 years after the local church leaves to have coverage. So with respect to that, you have that 3 years to cover that $1 million gap. Remember that self-insurance gap that's going to cover that part for the local church if the conference is sued for something that occurred at the local church. So that's what's happening in Florida. It's a very unique situation. At this moment of time, in June of 2022, insurance coverage exists for 3 years, not for going back to 1996. And that, again, it's just a Florida unique situation because of the legal issues that arise in Florida that aren't present in any other state.
Thank you for the clarification, Dan. If you or your church is looking to leave the United Methodist Denomination and are interested in hiring our firm to help you through the process, please reach out to our office at 313-859-6000 or email us today. Thank you.